The first one is working without a budget. This is where money has no direction. You know how much money you make, but how the money gets out of your account, even you, it's mysterious. You don't know. You have no control. Procrastination is the second one. Always planning with a starting later in mind instead of starting now. A lot of people have procrastinated until they lost the opportunity. Low financial literacy. A lot of people have got huge goals they want to accomplish, but they lack skills. Their financial literacy levels are very, very, very low. They're not able to achieve anything. Inconsistent savings. How can you be earning regularly but investing accidentally? You need to be very, very structured, and you got to be very intentional when it comes to issues of investments. Spending which is driven by peer pressure. A lot of people are copy-pasting what their peers are doing with their money. We are all wired differently. We have different circumstances. We earn different amounts. Dependence levels are also different. Poor debt management. A lot of people are borrowing carelessly, relying on Xerox, and others are signing as guarantors for their peers in their circles without reading the fine prints, knowing too well that if the borrower defaults, the lender is going to come for you as a guarantor. Spending everything that you earn, and this is why people keep going around in circles, that all the money that you make, you are spending it. You are leaving no room for savings, leaving no room for buffer, leaving no room for emergency funds. There are still people who believe in money mates. I'm still too young. I earn too little. Others are saying, I'm going to fix these things later. What is your circumstance? There are a lot of other people who lack clarity of goals that they want to accomplish. If you don't have clear goals, these goals are vague. They are not defined, no timelines, no budget. You are not likely to achieve such goals. Finally, the section of people that are chasing status instead of building assets. I keep hearing people saying that I'll fake it until I make it. Unfortunately, not everyone that fakes it makes it. These are the statistics on the Kenyan health status financially. 85% of people spend more than they earn on average. 90% are walking to retirement without sufficient savings for retirement. They're just carrying excuses and blame games. 98% of retirees are not able to meet their medical obligations. They rely on medical fundraisings. This is a very worrying trajectory. So, do you know where your money is going? And are you in control? Are you very intentional? Do you have clarity of how much money left your account last month? What's the accountability level? Is your money going to take care of needs? Is your money going into savings and investments? Or is your money just funding a lifestyle? Whatever you do with your money today, we may not know exactly whether you're on the right path or not. But you know what? It is when the tide goes down that we shall know who was swimming naked. At the finish line, we are going to know who was doing what with their money. For all your emergencies, we have an interesting product called Money Market that helps you take care of your emergency funding. A money market is a low-risk fund that invests in short-term government securities that comprise of treasury bills, treasury bonds, debentures, commercial papers, fixed deposits, etc. The primary objective of a money market is to generate a competitive return from a diversified portfolio while ensuring that the investment risk is contained. The fund managers will place high priority on security as well as accessibility to these funds. You can access the money any time of the day or night, over the holiday, weekend, etc. You can also top up the account as and when you wish. The average yield in the money market accounts right now is at about 10.42 gross of tax. That's the way they're holding tax. So what are some of the benefits of money markets? The first one is flexibility. There's no minimum investment period, no deposit or withdrawal charges, no restrictions or frequencies of deposits or withdrawals. Second benefit is withdrawal benefit. You can deposit or withdraw your money real time through this USSD code *480#. Transparency. Rates are declared and updated on a daily basis. Fund performance is captured on fact sheets and the same is shared with investors every single month. Rates are net of fees but gross of tax. Returns, as I said, the average performance right now is about 10.4, 10.5%. Stability. Money markets are regulated by Capital Markets Authority through an act of parliament. For Old Mutual, which is a company that I serve on the money market front, the custodian is KCB, and we have a custodian who oversees the operations of the fund manager, as well as the custodian, to ensure that the clients are not exposed to any risk. Just a snapshot of the top tier money market funds in Kenya as at 6th of February 2026 and their respective performances. Old Mutual was reading at 10.42, followed closely by Jubilee at 10.1, and at position number 10 was Absa Money Market at 7.52. As I said, this is the top tier money market funds. We got, second and third tier, but for purposes of security, I always encourage that you go to organizations that have had a good track record. Now, ladies and gentlemen, successful people have used contractual investments to achieve their medium to long-term financial strategy. We make money maybe on a regular basis, whether you're employed or in business. But the biggest tragedy for some of the people is that you do not know how to budget your money so that you can take care of your present circumstances and be able to build a financial cushion for your medium, long-term, goals. Contractual investments will help you to plan for your medium to long-term financial goals. A contractual investment is a virtually all-in-one product that combines your investment requirements and your life coverage requirements. The investor takes a contractual investment for a premium and term that aligns with their goals. The plan allows a flexible premium payment option that can either be monthly, quarterly, semi-annual, or annual, depending on your income pattern. The investment allows you to maintain a flat contribution of the premiums, or you can keep reviewing the same upwards at a rate of 5%. The investment offers a guaranteed and tax-exempted maturity benefit. Remember, most of the investment instruments that we got in our country never give you any guarantee on performance, and they are always charged some tax element. This particular one has a guaranteed payout, and you are exempted of tax or the maturity benefit. Any case of accidental hospitalization of a minimum of 3 days will qualify for what we call hospitalization cash, which is up to 0.2% of the amount that you're insured. During the term of the investment, all eventualities of death, disability, and critical illness are covered. For terms 10 years and above, the premium that you pay attracts a tax relief of up to 15% of the premiums, capped at 5,000 per month or 60,000 shillings per year. The minimum entry age into this program is 18 years and maximum entry age is 65. And you can invest for any period between 5 and 20 years, depending on your age and your financial circumstances. In case of an emergency, you can do a one-off part withdrawal from the fund anytime from the 6th year. This amount is not going to be charged any interest, but will be fully recovered from the final payout upon the expiry of the contract. Finally, this particular program is ideal for people who've got financial goals. They've got a financial discipline, and they're committed to the investment agenda. Some of the agendas that you could be investing for here are, maybe you want to invest for the education of the children. Maybe you want to invest because you want to build a house one day. Maybe you want to invest because you want to start a business one day. Maybe you invest because you want to buy a house one day. Whatever the goal, anything 5 years through to 20 years. I think the whole idea here is from your regular income, can you allocate at least a minimum of 25% of your regular income to go into these medium-term contractual investment funds that will then be able to give you a lump sum that will achieve the agenda. I've talked about the endowment fund and some of the benefits that I've talked about. One, the tax advantages or the tax benefits. I've talked about the emergency cushion. I've talked about the accidental hospitalization cash. I've talked about the guaranteed maturity payouts. I've talked about life cover benefits that are given. I've talked about diversification of the fund. I've talked about the flexible premium payment options. And this is a goal-based financial program. Let me briefly talk about money personalities. When people have or don't have money, we note a few personalities that reflect the way we socialize with money, depending on where we come from. The first character is called a spender, and these are people who heavily spend on lifestyle. They most of the time go for flashy cars, expensive rental apartments. They're always going for designer clothes. Many of them are depending on credit cards and loans that they borrow from their various lenders. They're doing these things to be able to fit in particular social classes to please people who don't even care. You are deemed to be a spender if you're investing less than 25% of your regular income. Second person or personality is a saver. These are people who derive their gratification from bank balances. They leave most of their portfolio lying in liquid form in a bank account, savings account. The problem with this account is that it's not going to give you value for money. You'll be deemed to be a saver if more than 20% of the savings and investment component is going into a savings environment. The next person is a dreamer. These are people who start and let their financial planning the dreaming. They don't major in the planning and never taking the first step. They will not actualize anything. The song they sang last year, they're singing it this year. You'll be deemed to be a dreamer if more than 50% of the goals that you had for the year are either not started or completed within the calendar year. Finally, we've got the investor. Investors are not defined by their bank balances. but by the way they relate and socialize with their money. They are long-term in their planning, very diversified in their scope. They don't allow any procrastination. For them, they work and work with their accountability partners. You'll be deemed to be an investor if you're investing a minimum of 25% of your regular income. Debt management. Ladies and gentlemen, let me mention this. There are a lot of people in our country that have died under the weight of debts. There are many people that have been auctioned. Many marriages have broken. There are people planning to commit suicide next week. People have actually lost their cars. Some have lost their homes. And where is the problem? The debt appetite is very high, but the debt repayment strategy is ever wanting. If you come across such people, I want to share with you 8 different ideas that will help you in your debt management. The first one is, as you prioritize paying the debt, can you start with the most expensive one? You might have a debt charging you 12% per year, another charging you 20% per year. In as much as the two debts are important to pay, can you give more emphasis on the debt that is expensive? Because it will otherwise eat away all your savings. The second one is debt consolidation. If you're in multiple debts, can you consolidate the lenders so that you're left dealing with one or two? You can't have a debt with Stanchart, with KCB, Cooperative Bank, Equity. You have one with Stanbic. I mean, you've got debts all over the place. Try to consolidate them so that you can reduce the baggage. The other is debt repayment and reduction strategy. If your organization pays you bonuses, dividend, overtime, etc., why don't you direct such monies into reducing your liabilities? The other one is build an emergency fund. A lot of people get into debts because they didn't have emergency options. Budgeting, it will help you to control the way you spend your money and in essence reduce your spending appetite. Delayed gratification, there's the big goal that you want to accomplish this year. If the accomplishment of that goal is going to upset your current financial standing, why don't you delay that goal until maybe later in life when you're a bit more financially stable? The other is debt negotiation. Why don't you negotiate with the lenders on the interest they are charging you? Some of them are willing to reduce the interest that they are charging you. Finally, asset diversification, which is going to enhance options in case of sudden financial demands. So how do you avoid debt cycles? Ladies and gentlemen, discipline is needed. You got to be very strategic in your planning. You got to have an immediate shift of mindset. And a few principles will guide you in this process. One, you have to ensure that you live within or below means. Don't spend more than 50% of your income on needs. Differentiate your needs from wants. Ladies and gentlemen, not everything that you need today, you want to buy today is a need. Some of them are wants. Unfortunately, the bulk of people are able to manufacture needs from wants. Finally, create and stick to a budget. A detailed, realistic budget is your financial roadmap. It will help you to track where your money is going. It will help you identify the spending risks and to ensure that you live within or below means. No one wakes up financially fit. Financial fitness is built step by step, habit by habit, season by season. And these steps will help you manage and achieve the agenda. The first one is the strategy. This is where clarity begins. You first need to understand your financial planning situation holistically. This will then enable you to take appropriate action, whether to go for a contractual or non-contractual investment. Roadmap. This is where financial trajectory is clearly defined. You need to view your future from the present. Know how to deal with the bumps on the way, because there are enough bumps. Some of them could be bad debts. Others could be business collapsing. Others could be the state of the economy. The other could be politics of the country. The other could be trust levels, credit levels, etc. Let's talk about security. It is where protection becomes a priority. Whatever that matters to you, cover it. Avoid carrying too much risk in your pocket. What you can transfer to an insurance company, I would rather you do. Freedom. It is why you stop working for the money and allow the money to start working for you. Ladies and gentlemen, having money lying in a bank account is not going to give you the freedom that you are looking for. You'll forever be working for that money if the money that you've already built so far is not helping you to work. What is your targeted income replacement ratio? Because retirement is coming one day. What level of income replacement ratio do you think you're going to achieve? Can you afford a good holiday? Will you be able to afford your current lifestyle? Will you be able to afford decent medical care? Let me talk about legacy. It is why the focus changes from the chaos of life to leaving an impact. It's good that you can have a succession plan. This can either be done through a will or a trust, but you need to be legally guided. I believe all of us have got a legal expert who guides you on matters of succession planning. This is now how you can improve your money management skills by using the top 5 animals. There are few lessons that you can be able to pick from this. The first animal is a lion. When it comes to financial planning, the buck stops with you. You need to invest for yourself before you can invest for others. Ladies and gentlemen, remember that and remember it clearly. A lot of people have financially failed because they overdid things in the black tax area. That all that you made, you even went into debt. You borrowed around from the bank. You borrowed around from the circle. You borrowed around from a Shyrock to be able to support agendas of other people. You got to be very, very structured, take responsibility, and put controls where they are needed. Elephant is the second animal. This animal has got amazing memory. All of us need to have this kind of memory for us to keep track of our goals, income, and expenses. And because at times you have a problem of memory, can you write down the goals that you want to accomplish? Keep that in a conspicuous corner of your bedroom. You'll forever be reminded of the things that you are pursuing this year. Because already we are on the third month of this year, and people have already forgotten the things they wanted to achieve this year. The next animal is a rhino. Confront all your threats. This rhino confronts all the threats that come its way. Some of us have threats of debts, fear, peer pressure, procrastination, spending without a budget, lifestyle demands, and black tax. Confront all these threats for you to be able to make a financial turnaround. The next animal can either be a leopard or a cheetah. And a focused person knows that big goals are achieved by taking small steps correctly and diligently executed. These animals spend most of the time hiding at the top of the trees. The moment they identify a gazelle down there, they'll make carefully calculated steps towards the gazelle. And when the chances of success are 90% and above, the leopard or the cheetah will pounce on that gazelle, kill it, and immediately pull it to the highest point of the tree where it will be safe from other carnivores. How are you dealing with your dream busters? How are you dealing with your dream busters? Finally, we've got the buffalo. Buffalo, the message is on diversification. Buffaloes will walk and graze together in numbers, and that's how they protect each other from the carnivores. The moment one is isolated from the rest, it will be attacked. Diversification is the ultimate solution for protection and growth of our assets. You need to know your risks and come up with a strategy of managing them. The first risk is on critical illness. Ladies and gentlemen, we are just an illness away from poverty. In the event you are diagnosed with a terminal illness, what's the current status of your medical coverage? If you don't have a medical insurance, you can be sure that you're going for medical fundraising. It is becoming a nightmare. To raise $1 million shillings in a fundraising is becoming a nightmare. You put people in a WhatsApp group, within minutes, a lot of them have left without contribution and without award. Please, guys, let's be more strategic. Let us have critical illness cover. Let us also ensure that you've got normal medical covers. Disability. You are who you are because of your current status of health. If this was disrupted, your economic productivity will be disrupted as well. But what happens to the people who are depending on you? A lot of them are going to be thrown into the wilderness. They are going to be thrown to the deep end of the sea unless you are so structured that you build a cushion for such dependence. Let me talk about death. There are so many people that have died today. There are people who are dying tonight. There are those who die tomorrow. There are those who die later in the week. There are those who died like yesterday. You never know your date. I also don't know mine. But what happens to the people who are depending on you directly or indirectly? You need to build a life coverage that will be able to support the financial obligations which your dependents were depending on you. Finally, we have got the set of expenses. It is becoming a nightmare to send off a loved one whenever they die. It is becoming very overwhelming. Raising money through a fundraising. Why not become more strategic? Just take a last expense cover. It will take away the financial and emotional burden. When a member of the family who is covered dies, and there is a last expense cover, the insurance company will pay off the benefit between 2 to 3 days. And that will help in the send-off expenses. For as little as 3,750, you can take a cover of 100,000 shillings. For as much as 31,300, you can take up to 1 million shillings cover. And this amount, as I said, is paid between 2 and 3 days to be able to give the person a decent send-off. So what is your reality check? Do you have liabilities? How did you get into debts? Are you being charged interest? What is the current interest rate that you're being charged? And when are you going to clear that debt? Are your assets dead or invested? Are they known or unknown? Are they documented or not? Are they in solid or liquid nature? Do you have dependents, and can your dependents survive in your absence or absence of your income? Would your current savings be able to sustain your current lifestyle for a minimum of 25% of the time that you've worked so far? Let me repeat that. For the time that you've been working, let's say somebody has been working for the last 10 years. Do you currently have savings that can sustain your current lifestyle for a minimum of 25% of the time that you've worked? For a person that has worked 10 years, 25% of that time is about 2.5 years. So have you built a savings that can sustain your current lifestyle for 2.5 years? You know, a lot of people are living from paycheck to paycheck. The moment your salary is dead for just 1 month, you are so severely, disrupted. If you are diagnosed with a terminal illness, what is the status of your medical coverage? You know, the other day, a mother of a friend of mine was diagnosed with 2 terminal illnesses and ended up at Aga Khan. 91 days she was in the ICU. The bill hit that 7 million. How do you pay such a debt? What is the net of your assets and liabilities? And this is what we call the net worth. A lot of people are worth so much in assets, but a lot more in liabilities. And that's the reason why their net worth is a negative number. And what is the status of your succession planning? Do you have a will, or do you have a trust? Retirement planning, very, very important subject. Retirement is not the end of life. It is the beginning of life in your own terms. Retirement is an individual responsibility. What is your definition of retirement, and what is you going to think about retirement? At what age are you going to retire, and how much time is left? How is your current relationship with money? Are you a spender, dreamer, saver, or are you an investor? Will you be able to maintain your current lifestyle when you retire? Am I going to downgrade? You know, it worries me. People living in river suburbs, now when they're in their productive phase, and then when they retire, they are pushed out of those river suburbs into the outskirts. How can you live in Lunda, Karen, Lavington, etc., and then when you retire, you are in the outskirts? Why don't you start with the outskirts, come towards the river suburbs as you progress towards retirement? A lot of people are climbing their tree from up, going down. What percentage of your current income are you investing? Is it 25% or below? What is your current status of emergency and medical coverage? Will you have cleared all your debts, loans, and mortgages before retirement? You know, a lot of people are retiring with debts. And if you retire with a loan, you retire with a debt, you will never know peace. Every so often you are called, a letter comes, a message comes, an email comes, you are being reminded to pay off the debt. After retirement, what is going to be your income replacement ratio? Remember, as I said, it is when the tide goes down that you are going to know who was swimming naked. What will you be doing with your time? You've got to be so structured that you think through what you want to be doing when you retire. A lot of people have got so much time, but no money. The goal of a retirement is to live off the asset, not on the assets. These are some of the most unfortunate facts about retirement in Kenya. On average, Kenyans are retiring at 60 years. But look at those that have retired, about 60% of the retirees have already sunk into debts, poverty, depression, and hopelessness. 50% of retirees are not able to maintain their retirement lifestyle. They become idlers. Others have been pushed out of the river suburbs into the outskirts. Those that used to drive Range Rovers are now driving Proboxes. Those that were driving Porsche, they have now gone to East. You've got to think about that and plan for yourself. About 40% of retirees deplete their retirement savings when they're still in good health. And then what happens after that? They start relying on their children, and they start relying on their society. About 30% of retirees are asset rich, but cash poor. They are now stuck with solid assets, no signs of liquidity. Many retirees are pursuing physical fitness at the expense of financial. You retire, you live long, but very broke. Retirement is not about age. Some people have been forced to retire earlier due to medical circumstances. The best definition of retirement is the age at which you're going to give your money space to work for you. Today you're working for the money. When are you going to give your money space to work for you? You cannot work for the money for the rest of your life. What actions have you taken on your financial planning? Ladies and gentlemen, the bulk of the people are either complaining, procrastinating, or seeking financial literacy. Only a handful of them are intentionally progressing towards action and execution. And the queue, this can tell you very, very clearly. Look at the queue of those that are complaining. Look at the queue of those that are procrastinating. Look at the queue of those that are seeking financial literacy. But in very many cases, a lot of people never progress to taking action or even to make a concrete plan. You got to take care of yourself before you run out of time, health, and money. Unfortunately, when people are young, they think there's enough time left to do these things in the future. As you're getting to your midlife, your priorities are very, very different. You don't prioritize investment. As you get into the pre-retirement, you are mentally ready, but financially not because of the kind of budgets that you're managing. Your lifestyle expenses are already stretching you beyond control. Unfortunately, for a lot of people who are retired, they start feeling ready for some of these things, but they're already time bad, no money, they're already sick, and they are very broke. That's why I'm saying, ladies and gentlemen, you have to think, stop at this point, think and reflect, and ask yourself a simple question. What is the status of your individual financial planning? Let me tell you what. Investment is not a collective decision, it's an individual responsibility. And even where people make corrective decisions, the impact is felt at personal level. Let's look at this puzzle and ask ourselves, what is this? There's chance against one and nothing against two. I want to help you interpret this puzzle. Life is not going to give you a second chance. Life is not going to give you a second chance. You always have one chance to do things right. If you don't, it doesn't matter the excuses or the apologies that you give. You lost it, you lost it. Do not allow fate to seal your fate. Do not allow this life to seal your fate. Make best decisions. Always put your best foot forward. I'm winding up with my final facts. Obstacles and excuses are what you see when you take your eyes off the goal. You know, when you don't want to do something, you have enough excuses. You can never dream yourself to right. So take action and remember procrastination. Procrastination is the biggest threat to financial wellness. If you want to move your greatest obstacle, realize that the obstacle is yourself. You know, enough times I meet people who are financially failed. You talk to a lady and ask her what happened, they blame their husbands. You talk to the husband and ask them what happened, they blame their wives. Let me tell you, ladies and gentlemen, the obstacle is yourself. You are your own greatest enemy. Nothing great is going to be achieved suddenly. It takes time, focus, and discipline. Remember, Rome was not built in one day, and neither is your financial wellness. Take small steps that will help you conquer the bad habits. There's no correct way to do the wrong things with money. Bills don't retire. Ladies and gentlemen, bills don't retire. They grow just like human beings. The day you stop living, that is the day your bills will die. Ask yourself, what will it ultimately cost me if I don't take action now? Remember, your attitude will determine the outcome. When it comes to investments, there's no future in the past. Put your best foot forward and never backward, because winning is driven by focus. When it comes to investments, the first step is the most revolutionary step. It is what separates the achievers from the losers or from the jokers. If you want to win, you must begin. Have no space for procrastination. Ladies and gentlemen, think through this budget formula, this success formula. Think big. You got to start small, but you got to start now. Let me thank you, ladies and gentlemen, for this opportunity that I was accorded to speak to you about financial planning. And as I wind up, I want to tell you this. No one wakes up to fail. People only fail to plan. If you are not planning, don't worry. Poverty will plan for you. Ladies and gentlemen, I invite you to connect with me. If you want to learn on investment tips, free of charge, just scan that code and to be able to give you entry into my various social media platforms. And every single day, there will always be an idea that I share with the public on issues of investments. I share issues of debt management. I share issues of succession planning. And you'll be able to have access to all this for free. You also have got my numbers there. You can drop me a message, and I'll be able to share with you a budget tool. This budget tool is revolutionary. It will help you in your financial planning. It will help you to understand where your money is going. It will help you to give your money direction. Remember, that was the topic of today. We have to show our money where it should go. If you don't do that, expenses will. So to be able to have clarity and view of where your money is going, pick this number, drop me a message, and only ask for one thing: budget tool. I will then share with you a budget tool which will help you to understand exactly where is your money going. This is Alfred Matthew, your financial doctor. Once again, thank you so much, ladies and gentlemen. I hope you find value in my presentation and that this should be able to help you in your financial turnaround process. Asanteni sana. Thank you so much, my dear Esther, for giving me this opportunity. May God bless you and favor you all the time.
Wow. Wow. Wow, Bwana Matthew. Wow. I can listen to Bwana Matthew all the way. I'm telling you. You've asked us very serious questions, and sometimes we think we are doing well until, thank you, Eric. until you listen to Bwana Mathu. The dreamers, the investors, the spenders, the savers. How resilient is your financial structure? You know, and I'm still asking myself that. Telling your money where to go, not wondering where it went. You know, it's a culture. Sometimes we feel robbed after a few days of the salary. Bwana Mathu, someone is asking, "Hey, did they really pay me? Oh, did they really pay me?" You know, it's a friend of mine said, you know, you need to know your relationship with money. Is it long term or short term? How long does money stay in your hands? How long does it stay in your hands? Is it a short term or a long term? This issue of black tax, Bwana Mathu, I mean, left, right, center, and it's a culture. It's really an African culture that we support family, you know. I met a friend who told me, you know, Esther, I've made a decision that every month I put aside 20,000 of my salary for black tax, because there'll be a relative somewhere, there'll be a sister, there'll be someone, there'll be a friend, there'll be this. When that money is exhausted, the rest of the people in that month have to wait for my budget of next month. Talk to us about this black tax, Bwana Mathu.
I met a certain lady last year, a lady who works for the Standard Chartered Bank. And this lady is a firstborn in a family of 3. The father and mother are in their retirement age. And this lady told me with honesty that the father and mother were struggling to pay off a debt that they owed one of the banks. And that debt had actually caused so much animosity and pain in the family that the father and mother had even stopped talking to each other. So this girl decided to prioritize helping the parents to pay off this debt. She went to her own circle, took a loan of 1.6, which was equivalent of the amount that the parents were owing at the time. She paid off the entire debt on behalf of the father and mother, took the debt and, took the loan and directed it into a joint account of the father and mother for them to offset the debt. And soon after, the parents cleared the debt, and for once, there was a lot of love and peace in the family. Now, I want to hear the very saddest part of this. Exactly 3 months later, the father took up another debt. How do you feel about that? You have gone out of your way, taken a loan, made that huge sacrifice to get your father and mother to peace, paid a debt of 1.6 million shillings on their behalf. And this debt had gone into a failed business. But immediately after helping them to settle the debt, the comfort didn't last for long. The father went back to the bank and took another debt. What does that tell you? As I said earlier, human beings can manufacture needs from wants. It is up to you to come up with the right structures that give clarity of how much you want to support the members of family, your siblings, your parents. And it is okay. It is justified. To support your father, to support your mother is very justified. But wisdom dictates that you must give a good measure of how much you want to give. You cannot give what you don't have. Unfortunately, a lot of people are pouring from an empty cup. You have gone to the extent of borrowing very expensive debts to help people meet their own obligations. I had a chance to meet and interact with guys in US last year, some 2 months that I was there, and a lot of Kenyans, they work so hard, and they direct all their money to Kenya to support their people and also for investment ideas. Unfortunately, most of the money that gets here, the family members that are entrusted with this money, they buy themselves cars, they buy plots, they build homes, they marry, and even marry the second wife, and even marry the third wife based on money that is coming from US from their siblings. By the time the one who was sending money gets to retirement age, and they are now trying to get clarity of how their financial status, there's nothing for them. And if you make a mistake of coming back to Kenya, In that state of hopelessness, I can assure you, the same people that received your money will abandon you. You become their laughing stock. So what I'm trying to say here is that use your own wisdom to decide, how am I going to be supporting my parents? How am I going to be supporting my brothers? How am I going to be supporting my sisters? How am I going to support my my uncles and my aunties and nieces? Decide. But ensure that as you do that, be like a lion. Be in charge of your money. Before you can take care of others, take care of yourself. Those of you that fly most of the time, by air, you realize that you're told, in case of any technical problem in the air, can you put your own life jacket first? You don't put the jacket of the other person, or your daughter or son or husband or wife. No, you put yours first. You can't help people unless you yourself have taken care. So I want to advise you, ladies and gentlemen, be careful how much you want to throw into black tax. Work with a budget and ensure that you soberly follow what that budget is about. Don't go to the extreme level of going to debts for the sake of other people.
Wow. Wow. It's 3 minutes past 8. Do we have any question or comment? I still see people saying, wow. This money conversation, the financial doctor, this is a conversation that we need to have. I think, should it be before the salary? Because it looks like it's a recurring problem. But but I know there are some that are doing well. Not everyone has this problem, but I think it's a conversation that everybody needs to take very seriously and build a future for yourself and for generations to come. I don't know whether we have any comment or questions, but that has been quite inspiring. I listened to you and the passion you deserved, and you continue to deserve the Financial Wellness Award.
Thank you. Thank you very much. Thank you very much. And asante sana to all those that have written to me requesting for the budget tool. I'll be sharing the budget tool very, very, very shortly. Just take that bold step of faith and you can be sure it will be a turning point. I'll share with you the tool and your life is not going to be the same again. Just drop in the message on the numbers that I shared and I will share with you that budget tool. And I think that will be the starting point of your new journey.
Amazing, amazing. I know, I call him Daktari. Bwana Matthew, you will allow me. This title I've given you permanently now. I call you Daktari. Please talk to him. Daktari will take you for coffee. And when you leave there, your finances will be aligned. So make an appointment with Alfred Matthew, the financial doctor. We will leave his contact on the screen as we pause, we stop recording, and then you can scan that and contact him. But thank you very much, Mr. Matthew. Thank you, everyone that joined. Have a good evening, and God bless you. Bye-bye.